Thank you, Mr. President. And we're lucky to have her. Pleased to present her, Carolyn Wilhight, our own certified public accountant, who has served in her capacity um, for over 8 years with Cook County. But she has over 32 years of expertise in the financial industry, ranging from public accounting and corporate auditing to project management, or is it product management, for Arthur Andersen and Company and BMO Capital Markets, Harris Bank, respectively. She served the county in the capacity of Deputy Recorder of Finance with the Recorder of Deeds, as well as Deputy Clerk of Real Estate and Tax Services. In addition, she supports the clerk's office financial team. She's an alumnus of Purdue University and a member of Alpha Kappa Alpha Sorority Incorporated. Formerly, she was a two-term member of the Westchester School Board, where she held the positions of school board president, secretary, and financial committee chairperson during her tenure. She also served as the IASB West Cook Division Vice Chair. She served in a variety of small business and nonprofit organizations. You can see Carolyn's pretty busy, but even though she's so busy doing her job and so busy in community, she's really passionate about ensuring individuals and businesses thrive financially. She's an active instructor at the Living Word Christian Center at the Joseph Business School that's located in Forest Park, whose mission is to equip entrepreneurs and individuals using practical and biblical principles to raise companies and create wealth to transform desolate places into flourishing communities for the glory of God. Carolyn's married to Clanton, her husband of 28 years, and the proud parent of 2 adult children. Carolyn, thank you so much for being with us today. I hope everybody's got their taxes done. I know they don't, but I hope they do. But I'm hopeful today that you might shed some light on, for me, it's always a frustrating time of the year. Make it plain for us. You got the mic, Carolyn.
All right. So first, just want to make sure I am sharing my screen. Do you all see Table Talk?
We do.
Perfect. So I want to make a couple of disclaimers. One, I do not have a second job. So if Scott's on here, I don't have to fill out that form, okay? So I want to make sure that that's clear because a lot of the work that I do is truly voluntary, pro bono, and then of course I fill out the tax forms for the Wilhight family and a few other family members, and that's usually it. So as we have a little tax table talk, if through my presentation you see a typo, please send an email to Yvette Denny and let her know which typo you caught. I'm a firm believer in the eagle eye, and then you may win a prize on our end. I like giving out prizes, so tax services know that I like to do that to keep them engaged and to keep things fun. So with tax table talk, I know many of you probably have already filed your 2021 taxes because you may be that person of routine, got to get them in, got to have it done by January, whatever. But that's not me. I am one of those who wait. Why? Because I like to make sure the IRS has all of their forms in. There'll be no issues with what I'll have to submit. And so I just kind of wait a little while. And then depending on what's going on, I may wait as well and then just file an extension. But that's me. So today, what we're going to go through, and I know a lot of you who have filed, you're the regular ones. You've had taxable income for years. But those of you who know me, I've ran in a couple of marathons and I've gone through some training. And one thing with that marathon training, when they sat us down in class, they said, you are a bio individual. And that basically freed me up because then I didn't have to compare myself to anyone running next to me, anyone all the way 2 miles ahead of me or directly in front of me, or those who knew exactly what to eat, what to drink to keep their bodies fit. want to free you all up today as well. And so your new term is you are taxable individuals. And that means don't compare yourself to anyone else. Stop listening to the Jackson Hewitt, the H&R Block commercials that say, file with us, you'll get a refund. You are a taxable individual with different things going on in your households and your overall income. So with the information that will be shared today, it's for you, but also keep thinking about those who are ahead of you and those who are behind. Of course, we have our Generation X people. Some of them are retiring. And I bumped into one the other day. I think Denise is on here. I'm not going to say when you're retiring, Denise, but I know it's in your list of things you're going to do. And she mentioned something. She said, hey, I am at the point right now where I have to take out Social Security. That's a factor. That makes us taxable individuals because we're now all different with our income. Then there's the Generation Z people, those who are just getting jobs, some who are now buying stock. Think about it. You can now log on to Robinhood, have your own account, Ameritrade, do your own transactions yourselves, totally different from the 401k. That's impacting you as an individual. Then there's wonderful millennials, our job hoppers, and then they're buying homes. So this makes a difference with your income as well. And then we got the newcomers. I looked online and they call them Generation Alpha. So these are the young ones. Let's see, I think it's, I'm trying to look at the date in which they're being born, 2010 to 2020. So they're going to be getting summer jobs and have to fill out the form to understand that they're going to be getting payroll taxes taken out of their income. So welcome to the Taxable Income Club. So with that being said, just some thought that I had for you all today is that taxes aren't new. Definitely not. And this is not something that we all sit around the table and really want to talk about. Okay, we're not sending any Instagrams, we're not sending any Twitters talking about, hey, how about that deduction? But it's not new at all. If you're a Bible reader, you know that there's nothing new under the sun, and that includes taxes. And the reason is because Jesus was born in a manger, right? Caesar Augusta told them, Mary and Joseph, his parents, go to Bethlehem and pay your taxes. And now we have internet. You can have your baby at home, and then you can pay your taxes online. So that's how things have changed over 2,000 years of what we can do. I'm going to take a quick survey, and if you all can do this by a show of your reaction hands, that would be great. That gives me an idea of who's in the audience and who I'm talking to. So, do any of you prepare your own taxes? Any reaction hands going up? Anybody? Do a wave real quick if I can see you. How about you, Gabe? Brian, what's going on? Let's come off of, let's add some video so I can see you all. Who uses a tax preparer to do their tax returns? Anybody? No one? Is anybody filing their taxes? That's important. Okay, good. Okay, Callie, thank you. I can see you. All right, great. Gabe, what about you? You do your own taxes or a tax preparer? Okay, Johnny, you use a tax preparer? That's a thumbs up for that. Okay. All right, just to see what we have going on. Cotter, what about you? You do your own taxes or you use a tax preparer? Thumbs up, thumbs down. Thumbs up. Okay, great. Next question. Have you ever received an IRS letter? Thumbs up. Nikita, you've received an IRS letter before? Let's see, Takesha, what about you? Received an IRS letter? Thumbs up, thumbs down? Anybody on the Rotary Club? Thumbs up, thumbs down, received an IRS letter? Okay, president has. All right. That's just to give me an idea of what's happening out there because again, as I said, we are taxable individuals. So what I want to talk through is, did you know you have taxable, you are a taxpayer with a bill of rights? Give me 1 second, I want to fix this. Okay. So you have a bill of rights and there are 10 bill of rights that we have as taxable individuals. And you can find this publication in detail on the IRS website. And it is, you know, the IRS has hundreds of publications, and this is just one of them. And this is publication number 1. So number 1, we have the right to be informed. So when you listen, I am a subscriber to the IRS emails. I get updates, so I may be just one of a few people, but I do find them interesting. They do keep me up to date with the knowledge that I need. However, as you can see with these 10, that we have the right to be informed, quality service, to make sure we get the correct amount for our taxable income, and a few more. But the last one is the disclaimer. And this one I bring up, and I documented this one in here, if you can see it. It says, you do not have the right to avoid paying taxes. 2008, it was Wesley Snipes, and you all probably remember his tax fiasco. That fiasco cost him 3 years in prison. He was brought up on charges of tax evasion. They tried to bring him up on charges of fraud, but I believe in the end, it was the tax evasion, and he had to pay millions of dollars. So even though taxes to some may be considered voluntary, I would say don't volunteer and not pay because you can be voluntarily taken to jail. On our agenda today, I'm going to cover a couple of things and I'm going to be monitoring the time to make sure I hit these topics. And we'll go through the primary goal all the way through dates to remember that were brought up today. What's important for us to make sure that we are mindful of going through this current tax season and then throughout the year. My number 2 item here is planning ahead for tax season. And I find that to be very important because as I stated in the beginning, we are taxable individuals. And you may own a side business, but I'm trying to keep this kind of limited and I may hit some of those a little bit as I talk through this. So if you have some questions, you can place them in the chat. And then of course, Frank, at any time, if you want to interject a few, I may stop for a second so we can talk them through. But again, as I talk about planning ahead, and then we know that there are some organizations that do not have to pay taxes. However, with it, I highly suggest if you are a person with a business, if you are a person running a non-for-profit organization, that you follow up with your tax preparer, your CPA or advisor, financial advisor, and confirm that you do not have to pay taxes. However, I guarantee there is a form you must file with the IRS that will denote the fact that you do not have to pay taxes, and you may have to submit these forms annually. You may have heard of the 990 forms. Those are for those non-for-profit organizations. You may have heard of 501c3 application. Those are the things that keep those organizations in line so that it is known that they do not have to pay taxes. So we'll cover a couple of these topics here, the withholdings, things tax preparers hate, and then how income taxes are calculated, and then just going through tax brackets, myths, etc. So the primary goal is this. You don't want to owe the IRS and you don't want them to owe you. You want it to be equal. 0, 0. The reason why is this, and I know a lot of people are usually hungry for a refund, so therefore they file, right in January, or some people just want to I got to close the door on this so I can keep moving with my business. The reason is this: if the IRS owes you, yes, you will get a refund, but you don't get anything with interest. Now, the flip is this: if you owe the IRS, you will, if you don't pay on time, pay interest and penalties. So that doesn't sound like it's equal to me. So the best way to make it equal is I don't owe them and they don't owe me. 0, 0. And that's where you want to talk things through with your tax advisor. So here's a quote that I really like. And it says, "There may be liberty and justice for all, but there are tax breaks only for some." Anybody agree with that? Anybody want to show a raise of hands here? Any smiles going on, heads nodding? You can come off and show me your video a little bit so I can see that you're with me on this. I see a hand right there. I agree, Wendy. There may be liberty and justice for all, but tax breaks for some. And so there's a lot of things that I'll say some in different tax brackets can obtain, but those of us that are classified as the middle class, we are impacted greatly by some of these taxes. All right. So with that, since we're not getting some of those tax breaks, however, we can plan ahead for tax season. What I will tell you is this: for those of you who may have raised your hands that you do your taxes yourselves, making sure that you find or utilize the tax software package in advance. Not waiting until, today you're going to download something and try to get started and figure it out. Or better yet, find that tax preparer in advance. That way you are setting up that relationship with them far before tax season starts. And then don't ignore any IRS letters. They don't go away. They will keep sending them. It's an automatic machine send or system send until you respond, and it's typed into the system and it's received by one of their respective liaisons, clerks, representatives, etc. Key thing here for going into tax season, let's say next year, is maintain copies of your prior tax returns. And of course, if you've closed out your tax return already, please make sure that that preparer or yourself downloaded a copy, whether or not you saved it or you do hard copies as well. Very important. If you have a change of name, definitely make sure you filed it with the Social Security office, because that can impact your return being sent correctly and being aligned properly with what you did in the past. Calculate your potential tax liability. My son, he's heavily into stocks and everything right now. And so he's an advocate. He's like, "Oh, Mom, you should tell him do this 3 times a year, at least twice a year." And I'm like, that's a very good point. Simply because if you are starting to do let's say the Robinhood buying online, if you're doing a mirror trade, you need to take a look at what's happening with your overall income. Reason being is because as your income grows, and we'll take a look at that online as we go through a calculation, that may move you out of a tax bracket. So you'll be appearing before your tax planner saying, "Why do I owe? Why am I not getting a refund?" Because all these things may take effect on your income. Once again, we're taxable individuals. Monitor your payroll taxes. Yes, I know many of us are at Cook County that are on right now. We have the benefits site where we can go out and we can take a look at our check, take a little calculation, see if everything's right. Do it at least once to give yourself comfort that maybe something could be wrong with the county system. You never know. And then, of course, checking your withholdings, because that's very important as you have life-changing events happening in your home. So we're going to talk about 2 of these, or a couple of these: the tax preparer, and then definitely the withholdings. Frank, I see some things are piling up in the chat. Is there a question real quick, or I'm good to keep going?
You're fine to keep going.
Okay, sounds good. All right. So as I referenced, prepare for taxes in advance, and that would be credentials of a tax preparer. Anybody ever thought of that? Checking with the tax preparers, especially if you go to Jackson Hewitt, or you may go to H&R Block, you may visit some of those, or even with your CPA. You may ask them, are you current? Did you renew? Do you have your dues paid? Did you do all of that? Why? Because it may make a difference. Any tax professional with an IRS prepared tax identification number, a P10, they're authorized to prepare federal taxes. Now, over the years, the IRS has changed things. I took an exam several years ago to become a registered tax preparer. Then, because they got a lot of issues coming against them, they changed it where, okay, if you just have the number, you're signed, you're registered by December 31st, you can do taxes through the next season. However, there are some disclaimers there. And this is why I state ask to make sure. If you get a letter from the IRS and you are requested to appear before the IRS, you can give that letter to an enrolled agent, a certified public accountant, an attorney who can then represent you before the IRS. And that's very important because it can be a little bit scary if they send you a letter and they ask you to show up. Or, I don't know if you knew this, but the IRS can knock at your door. Yes, they can knock at your door so that they can examine your particular records. So just wanted to highlight that for you so that you are aware. Next would be withholdings. So with our withholdings, okay, let's see, let's get a show of hands. Has anyone gone on to the Cook County site to check their withholdings, make a change to their withholdings like in the last year or so? Okay, I see a couple of hands up. Hands up. I did. I made some changes there. Okay, Brian Cross, you haven't made any changes recently? Taking a look? Because you've been at the county now for what, about 20 years? Okay. All of that makes a difference because once again, as I stated before, we are taxable individuals. So then therefore, anything that happens in your household, you adopt, you get married. You may decide, I'm gonna let her go or him go. Now you're getting a divorce. Or you're like, I don't know what I'm gonna do with him. So you decide to separate for a minute. All of that impacts. So then therefore, assessing your withholdings just to determine how does things look right now. Let me do a quick calculation because the W-4 form is the form that tells Cook County or whoever your employer is the taxes to be withheld for you. As you all know, when we shifted from the Obama administration to the Trump administration, there were some changes that occurred. And as a result, they updated the W-4 form. So I would admonish any of you just to take a look, do the quick calculation that's out there to determine if you need to make some changes on the form and update it. And there's some other comments that I have out there that you don't have to do it annually. However, but if things are changing in your household, you definitely would want to. If you have, I'll give you a little tip here. If some of you are running a side business or you have dual employment and you're trying to figure out what may be best to do in respect to these taxes, this is where with your employer you can increase your withholdings, or you can do additional withholdings after taxes. So let's say you own a side business and you're like, I'm not good at sending in these quarterly reductions or deposits. So as a result, you go ahead and you may add a little bit more, and that'll be good because it's being taken out. And at the end of the day, when you do your taxes, you're like, hey, I'm kind of balancing out here, and that's pretty good. This is just my alarm to tell me where we are. Okay. make sure I don't go over. Sorry about that. All right, so that's the W-4. Let's talk about real quickly things tax preparers hate. And I don't know if you ran into this, but some things are changing with tax preparers. Some of them where you can upload your information and that's what they're looking for. But then there are those customers who still want to do the face-to-face. Don't bring a box of stuff with all of your receipts and everything for your tax preparer. That's a bit frustrating for them. But if you take the time to accumulate your information, such as you've done some charitable contributions. Take a moment, take the contributions, put them in a list in an Excel spreadsheet, total it up, staple it to the top of the package, hand it to your tax preparer, and they may give you a discount because they will be so happy that they don't have to do that. Receiving incomplete data, that is troubling to a tax preparer because it leaves them where they have to call you, email, and ask questions, and that just slows down the process of getting things done. Of course, the last minute, you want to show up today to get your taxes done, and you want fast turnaround. You've frustrated that preparer, and you don't want them to rush because you want to make sure your return is done accurately. And then there are the people who are hungry and greedy for a refund. As I stated in the beginning, we are taxable individuals. A refund for someone else may not be a refund for you. Totally disregard all the Jackson Hewitt and H&R Blocks commercials about we can give you that refund. And then, of course, answering the $1 million question. Why do I owe? That's a big question because it's a lot that may go into you owing for that time period or for that particular tax cycle that they have to discuss with you. And that's where going back, preparing in advance, where you're talking regularly to your tax preparer to say, hey, this is what's happening in my household. They can begin to tell you how that's going to look for you from a taxable income standpoint and give you some suggestions on what you should change or do mid-year. Even changing your W-4. You never know. Tax tips. Oops, going a little quickly here. And I just want to make sure I'm monitoring the time and I'm good. In regards to just a few tax tips here, here's a few that's listed for you. And one of them I will definitely say is be on alert when using certain online software to file because it may not be free. Once you get started and they see that your income is greater than $73,000, and this is the number for the IRS, you will then be charged a particular fee for using that online service. So definitely pay attention to that. If you find yourself that you owe, sign up immediately for an installment plan. Set the dollar amount that you can pay, and then once the information is passed to the IRS, and they receive it, they'll go through their process and write you back to let you know whether you're accepted or not, and then you can move forward with those regular payments. So this is just a couple of tidbits here to, so that you can do your taxes and be in line. One other one that I'd like to talk about is this bottom one, which is keep good records and keep them until the statute of limitation runs out. With that being said, you could be audited and they are looking at a particular year's tax return. If they find an error, the IRS has a right to go 3 years prior. So let's say, for example, they were looking at 2019, they can take you back to all the way 2016. So last year, I got a really nice letter from the state of Illinois, the Department of Revenue. They wrote me about my daughter's return, and I believe it was dated back to either 2017 or 18. And this was for $50. And they wanted to charge me $300 delinquent interest and penalties. And of course, those of you who know me, I got good records. I went back through all of my documents for my daughter. I'm like, let me write these people because they are not going to get $300 from me. With that information, I was able to reduce it, show what it should have been, and pay the outstanding amount. So it's very important to keep those good records. So if they're needed and handy, it's important. Also, I know we're going into the digital age and people don't want to keep paper, etc. So yes, it's in the cloud, but also get a USB, save it on that. But I'm a paper queen. I'm going to have a copy of it as well. So it's up to you, but the ultimate goal is keep good records. How income taxes are calculated. Okay. Have any of you ever tried to calculate your taxes? I see Linda's on here. Linda, show your face. Have you ever tried to calculate your taxes? I'm pretty sure you have. We do the same thing here. Jim, hands, anybody tried to do it? Okay, all right. Now, I've been doing taxes for quite a bit of time here. Going back when it was just the paper, when I think we had about 80 line items. And then it reduced to maybe 70, then 60. And then now we're at about 30. So let's see, Frank, if you can drop those documents into the chat where some people can just take a look at them. Because the key is this, when you received your return, did you take a look at it? Did you really take a look at it and see what the preparer came up with? Did you check to see if your numbers were right? Or was your only concern was, how much do I owe? Or am I getting a refund? So with income taxes, they are calculated on a marginal and progressive basis. And what that means is you're going to be taxed in ranges and percentages. I'll show you real quickly and I'll give you some homework. So the US currently has 7 federal income tax brackets, 10, 12, 22, 24, 32, 35, and 37. So with our new administration, they're talking about kicking it up to 39.6. I don't know if that's been done yet. I haven't paid attention to some of the news releases, but if it is, that just changes it to another category. So that would mean the max, and I'll show you what that max is. I'll go to this, I'm going to skip this real quick. I'm going to go to the tax brackets. So with the tax brackets, when I say it's a marginal and progressive amount, as you can see with that 37%, let me try to put my arrow here, the 37%, if you were single, you would be the federal income tax bracket for $523,000 would be the 37%. However, they want to increase it to 39%. Get a little, 2 point something percent more on that taxable income for those in that upper level. However, what's very, very interesting is this, and if you got a pencil and some paper, I want to throw these numbers out to you so that you can follow. And then when you go home, you do some homework to take a look at your tax return. So let's just say, if you're able to pull up from the chat and follow me a little bit, if they can do that. It's in there. So if you can take a look at your federal 1040 form, if you can open it, I'll give you a second. If you haven't paid attention to it, just take some time and take a look. And I'm going to get out of the chat right now. Arm myself. Okay, so I want to use real quickly as an example that if your taxable income was $67,000, so if we take a look at the tax brackets here, we do not jump all the way to 22% and say, oh, then I'm in this category. We actually start at anything greater than the 9,000, the 19,000, or let's assume your head of household at the 14,200. So what would happen is your 14,200, anything at this point will be multiplied by the 10%, and that amounts to $1,420. Okay, that's your first 10%. I mean, that's your first tax bracket. Next, your remaining Now, of that $67,000, I have $52,800 remaining. That puts me in my household here at the 12%. So when I calculate 12%, that gives me $6,336. Total together, I'm looking at a tax liability of $7,756. So with it, where I stated our income tax is progressive and marginal. It's progressive as you increase. Let me go back here. As you increase. However, it's marginal based on the range for each bucket. So I would challenge you, take your tax return, sit down, look at your tax liability and say, I'm going to try to calculate this myself and see what number I come up with. But also, if you cheat, go to irs.gov. They do have a site out there in which you can do that calculation also, just to get an understanding to see what you may need to change with your income, your W-4, some changes that you may need to make. If you have open, and I'm going to flip real quick for the sake of time, I want to go to the 1040. Now don't pay attention to, this is just a 1040 that I grabbed real quickly off of line here. And this is for non-residents, etc. But some of the lines are still the same. So what I want to talk through is line 15. Line 15 is your taxable income number. Let me go here. Look at something here. That number is what you want to lower. That's your taxable income. You want to get line 15 as low as possible. And so with that, that's where you have your standard deduction or your itemized deduction. And that goes into, all right, I got to show up at my tax preparer with all of my documents so I can get that number as low as possible. There were a lot of changes in the past 2 administrations or so, in which we may think that doing our taxes are real simple and easy because we went into these 7 tax brackets. But it doesn't eliminate for the tax preparer and for you as the taxable individual to show up, have all of your documents, so you can try to get that number as low as possible. So that line 15 is your taxable income that's impacted by only a few credits, and we call this, accountants, we say above the line and below the line. So above the line, I have my standard deduction, or I can do itemized deduction. Also, I'm going to throw this in, your adjusted gross income. If you follow that adjusted gross income, that is the number that will tell whether or not you get all of the other credits below the line. So that's why when I stated it earlier, we're all taxable individuals based on our total income from either side businesses, stocks, our regular salary and wages. Our income will fluctuate. And as a result of that, all of us want to get it as low as possible so that when that tax liability is calculated, it's low. So I'm going to go back a step because I know I said quite a bit here. Homework. Review your tax return. Take some time and look at line 1. Check and see if it's right. That should be your salary and wages. Tax preparers can make errors too. They can invert $9,009 to just $900. So you want to take a look at those. You want to take a look at line 11. What is my adjusted gross income? Reason is because that number will determine whether you get some of those other standard credits. And I'll flip back a little bit to those standard credits that are there. Or let me change that word. Not standard credits, because it depends on what your gross income is. Many of us have tested out of that. We don't get earned income credit. We don't get the child care credit. And those are things that impact your final dollar amount of whether or not you owe or you're getting a refund. Take a look at your line 24. tax liability. Find out what is it that the IRS is saying that I owe to them and why. Take some time to discuss it with that preparer. If you've done your taxes already, go back, have that conversation. Instead of them just giving you your, can't think of the full word, your estimates for next year, because maybe you didn't pay enough, ask them to explain it to you. Take the time to go through it and walk through your tax return. Because at the end of the day, when you sign that tax return, you are now liable for all the information that was placed. Line 27 through 30. Did I receive any credits? Is every box zero? Ask the tax preparer to explain it to you. Or if you don't have a tax preparer and you're doing it yourself, just Google. Google and find out, okay, here's the credit. Why did I miss that credit? Why did I not get that credit? So you can see the credits through lines 27 through 30 through the particular 1040 that we put in the chat for you. And then why am I getting a refund? And why do I owe? At the end of the day, stepping back, reviewing that, and thinking back to what I said in the beginning, we want it to be zero. I don't owe a you, and you don't owe a me. And how do I get there? And those are those lines, that line 1, that 11, that 15, that 24, and the 27 through 30 that will help us get to that point. Let's see, it's about 1:16. I'll take a few more minutes here, and then I'll wrap up for any questions. Some tax myths. Should I be getting a refund? I kind of explained that. We're taxable individuals. There's only 7 tax brackets, so completing my taxes should be easy. No, we want to make sure that you maximize all of your information, everything that you've done during the year, and turn that into your tax preparer. Because just showing up saying, oh, just give me the standard deduction, you could have gotten the itemized and have been much higher in lowering that taxable income amount. My tax bracket depends on my salary. Remember? Not necessarily, because taxes are marginal and progressive. The more dependents, the less of my taxes. Well, years ago, that made a difference. Now, with revisions to the taxes through the new administrations, not necessarily. And paying taxes is voluntary. Okay, you can volunteer not to pay and volunteer to go to jail. You choose. Filing my extension grants me an extension of time to pay my taxes. Hate to tell you, no, it doesn't. Technically, the IRS wants you to pay now, or better yet, at least send in some money. So then your penalties could be lower. These are just a few of the myths that are out there that I wanted to hit with you. And I think I've covered some. How to avoid penalties. Report all your income. Every form, your W-2, your 1099s, miscellaneous, if you are exonerated from debt, all of those forms get filed with the IRS. So you want to make sure that you also have taken into account those forms as well. File your tax form on time and pay any taxes on time. Prepare an accurate return and then provide accurate information on the return. Past years, someone came when I was working with someone for Jackson Hewitt and I was their CPA. Someone came in and said, well, my cousin told me to put down all these allowances. And I'm like, oh, your cousin told you wrong. We don't do that here. So we have to make sure we have proper and adequate information. And just so that you know, the IRS does not send text messages or emails. They will write you a formal letter if they want to speak with you, or they will show up at your door. Dates to remember. The last day to file, April 18, 2022. That's for our taxes, and you can file the amount you owe, etc. Now, there's some disclaimers here. If you owe, you definitely want to file that taxes by Monday. But if you're getting a refund, they're like, hey, we really don't want you to send it in too quick because now we owe you money. So as you can see, the last day to file for 2018 taxes also is Monday because you may be getting a refund. Okay, that's just a highlight there. Hitting just a real quick conclusion, and I'll take some questions if you have some. If you owe, pay the IRS even if you have to borrow it from your brother. Better to owe your brother than the IRS. He may disown you if you don't pay him back, but the IRS will take your house and then you have to move in with your brother. So I know those in the Recorder of Deeds office, in the Recorder of Deeds division, recording division, have seen where the Department of Revenue send over those wonderful liens because it's people who haven't paid their taxes. That's how that comes about. So I kind of jumped a little bit. I had quite a bit, but within the time that we have, and then if you take a few moments just to do your own homework and take a look at just your overall tax bracket and any tax deductions between that 27 and 30, just to see what's there, what may be missing on your tax return, you may be able to go back to your tax preparer and say, I need a redo, or do a redo yourself. At any time, you can do that. So I'm going to conclude here because taxes are so vast. I tried to narrow it down and get some high points here to definitely attract your attention. And definitely, you are a taxable individual in which you should be preparing for your taxes all year round based on changes in your own household and income. All right, thank you.
Miss Wilhight. Wow. Okay, thank you. First of all, thank you. And you made it plain for us. So I really appreciate it. You covered a lot of territory here. And one of my actually one of our sorority sisters actually reached out to me earlier this week asking for a referral. When I started reaching out for that referral, the 3 people I reached out to told me, oh, I don't bother with that anymore. And I think it had to do with what you were talking about here. People want to dump everything in a big bag and give it to their tax preparer. And it's not that kind of party anymore. So I appreciate you talking about that. Now I'm just going to go through the ones that I see here. We only have a few minutes here. There's a question here. What's the maximum you pay someone from your corporate activity before you're required to issue a 1099? Is it advisable to issue a 1099 for anyone that you pay as an independent contractor?
All right, now 1099s and independent contractors can be really tricky. So I would definitely advise whoever is asking that question to sit before a tax preparer to talk about it. Number one, you want to make sure, are they truly a contractor first or are they an employee? If you are dictating their hours and telling them what time they need to show up, what time they need to leave, and the work that they do, they're technically an employee and you could be on the hook for taxes, payroll taxes. Now, on the flip side, if they are truly let's say an external contractor, and vendor, it's $600. I believe it was $600 if they haven't gone up, but it's usually have been $600.
Okay, how about, can you use a Schedule C profit and loss if you're incorporated as a for-profit corporation in your state?
That's a little tricky. So with it, you also have to pay taxes because you now filed as a corporation. So you have to pay your corporate taxes, and then the income you do get from that will go on to your own taxes, and technically you should be issuing a W-2.
Okay, there's a question here about minimum target to reach for charitable contributions to count as a deduction. Now that's changed, hasn't it?
So if you're just doing a standard 1040 and you're not doing any itemizing, you can do 300. So let's say you did some goodwill and you have your goodwill receipts and you've documented on the back of your goodwill receipts what you gave up, and you can go on to the, there's a goodwill site that can tell you, okay, what is it for the resale value, and you can come up with your total. And then you have your support for your $300. Now, if you are itemizing, that has changed. It was at $250 that you had to have that receipt. However, if you continue to go further than that, you should still have the support for all the dollars regardless. So I hope that helps that person, because that's like a big question right there.
Great. Tax, when people talk about taxes, they have, and you cleared this up too, misconceptions. I think you made it very clear. The bottom line is you don't want to owe the IRS. You just want to pay your taxes and end of story. But so many unscrupulous tax preparers suggest to people to carry more exemptions than they have so they can get a bigger refund. What do you say about this?
The exemptions are old now.
I'm sorry?
They're old. So what I'm saying is, under the Trump administration, when he said taxes should be simplified and easy, so it must be your dependent. So before you had allowances, you had exemptions, and you had your dependents, and we got all those wonderful credits for all of those. That was erased and wiped out. So now it's almost lump sum inside of your standard deductions. So standard deductions, and I'm going to roll this screen back real quick if you can still see. I think I'm still sharing. I didn't hit this screen. I was just trying to move along through things. A lot of that is embedded in your standard deduction numbers. So when those things were taken away, especially the number of allowances, that relates to when I'm doing my withholdings and people were doing crazy stuff. I'm going to put 10 allowances out here so I can get the maximum dollar amount in my paycheck. But then when it was time to do your taxes, you needed to substantiate all that money. You needed to have 10 dependents. And then, people got caught. People were going to jail for that. So over the years, and then when we got into the last, two administrations, the single or married increased 12,550. So therefore, it took away some of those exemption dollars that we got. And that's why it's like, oh, did we really simplify, or did we do something and it's really not balancing out? I'm saying it's not balancing out. A lot of my tax preparer friends say the same thing. It is not balancing out.
Yeah, I would not think so. Well, maybe Washington, when they get off a dime, maybe they can, move it in another direction, because this, while the form looks simple, just kind of tack some stuff together, and you can't. Well, anyway, you can't do those things. Not that they were right, but I know people who have, they made up stuff. They just simply they put their dog down as an exemption, but you're supposed to have a social security number. So I wonder how they work that out. But anyway, let's see here. Rachel Jordan said Trump basically put all the taxes on the middle class. Yeah, that's what he did. Gary Wall has a question. Let's hear from him. Can you unmute Gary so we can hear what he wants to ask?
He's unmuted now.
Okay, can you hear me?
Yep.
Okay. A few years ago, we decided to do estimated taxes, where we wrote 4 checks a year because we were well, I wanted you to talk about, when do you decide whether to do the estimated? When does the IRS say, oh boy, you owe all this, you should have paid it more during the year?
Okay.
Got that?
Yep, I got it. I know where you're going. I'm looking for, so if you take a look, if you got an opportunity to download just a copy of that 1040, So with that 1040, because of the fact that, let's say, your income basically changed over time, and the IRS says you should have been sending us that money all for one of those 4 quarters. So let's say if I didn't get enough taken out with Cook County, and I'm looking now like, wait a minute, Cook County, now I have to make estimated projections of what my income may increase. Why? Because the IRS wants that money in advance. So therefore they say, make your estimated deposits based on last year's dollars, but with a potential increase of maybe cost of living 3%, yada, yada, yada. Otherwise, they will hit you with a penalty to say you should have paid this in advance. You should have included this during your year of time in paying your taxes, because now you are so far below, and those numbers vary. So with the estimated, if that is given to you by your tax preparer, that's another thing that I said, sit down, talk to them to say, where is my difference? Is it in my salaries and wages? Or because I'm doing some stocks, I got some capital gains in here. I sold, but I sold all my short-term purchases. And therefore I'm hit with that larger tax amount. Talk through those things so that you want to eliminate potentially the estimates. Now, the estimates can be good from the standpoint of those are taken into consideration when it's within the tax time, when they're calculating. I think it's line, I got it in front of me, 1 second. They will take into consideration on line 26, your estimated tax payments and the amount that was applied to help reduce your tax liability. So your tax liability totally amounted to $5,000. You made $4,000 worth of estimated. Okay, now I'm at $1,000. Is that all I need to send in now in April of this year? You're at a good point for that. Instead of having to mail in that full $5,000 tomorrow or Monday. I know I said a lot because I got it up here. Hope that makes sense to you.
Gary, I hope that was helpful to you. But just consider that when you make more, you're going to pay more, bottom line. Now, the last one we have here, it says, did I hear you say that those Jackson, Hewitt, and H&R Block commercials are misleading? I didn't hear anybody say that at all. And I don't know what commercials those would be. So I don't know how to answer that question. Did you say something
I
about?
want to make sure the person understands me. And that's why I used the term. I said we are taxable individuals. So me calling the clerk to say, you got a refund? Why didn't I get a refund?
Oh.
Yet the commercials are saying, come on in, you'll get your refund. Or you'll get it fast. Yes, but we are taxable individuals. Everybody may not get a refund. So that's how I was trying to point that. So no one, get me sued or something, that I'm downgrading Jackson Hewitt or H&R Block, because I love them. I learned from them. Okay.
Okay, I think that's going to wrap it up for us. This has been good time spent with you, Carolyn Wilhight. I'm glad you're a part of the clerk's team, quite frankly. But thank you so much for everything that you shared with us today. And obviously there was lots of interest because there are lots of comments here in this chat. We will be posting this on our site so that people can refer back to it if they would like to. But my warmest thank you to you, Carolyn, for sharing this information to all our listeners. So with that, Mr. President, I yield the floor.